Okay, hey everybody. Today is the 19th of October. So I just want to talk about pound dollar. So pound dollar, you got the upside. Last recording, we were looking for the upside, correct? So basically, it was over here. Okay. So basically, we were the bigger move was for this top to be broken, right? So we're looking for the upside. Also, we spoke about how dangerous things can look like it's going down. It can look like it's going down, but then suddenly it just reverses up all of a sudden. So it goes up, comes down, suddenly reverses up. That's something you have to be very very wary of, right? And now it's going to broken the previous high. So now we got the 1, 2, 3 and a 1, 2, 3, right? So now we got the move, right? Now what's next? So there are some. I just going to name a couple of things that I've seen from what other traders spoke of. All these are true, all good places to look for reactions. Okay, but remember that that's if it happens, right? So if price action comes down here, okay, fair enough. It's a good place to look for reaction. Come here, it's a good place to look for reaction as well, like a bounce, some kind of bounce. Right, but as a time factor trader, right, you're not looking for just this kind of trades. Meaning that no matter how it twists and turns, you should be more for. You should why not try to sell it down as well? Then from here, you should know how to get out because then reactions can happen. So if you can find a way to sell this down, you should. All right, you should try to sell it down because this is a big swing, not a small move at all. Right. Now we go down to let's go down to 1 hour. So basically, right now, we are in some sort of uptrend, like so, right? So what's going to happen now? Should we buy or sell? No. On the 4 hour, when it was over here, you're looking for the buy. But now that it's broken, this thing here is basically what you see is what you get. So there's no what I say on a larger time frame, you cannot really predict this going up or down. Right? Even if you look to the left, and yes, maybe you might get a reaction there, but maybe you might not as well. People who play reactions are just looking to get some kind of reaction like that and then basically just quit and just exit the trade. So that's one way of trading as well. But so what you want to do is actually trade this stuff as it goes up like this. That means you're going to go down to lower time frame. All right. So basically, what you want is you want this trend line to basically hold, right? You don't want this trend line to be broken. But even if it breaks just a little bit, goes right back up, then of course the trend line becomes this way. Okay. So this is what you basically have right now. What could happen here? Well, then let's just look at some patterns that you can probably recognize. Right, this one actually did something like that. See, it goes sideways, Right. So now it goes sideways is a good thing. Go sideways means there's one more up. But now this one started to push down really, really hard. And then now this one looks sideways. But if you took a sell just because of that, then of course you need to be prepared to be stopped out. All right, that's one way of trading. You must be prepared to stop out. This could also be making a double top here. And then this is where it ends. And then it drops, it goes sideways, and then after that it goes down. That's also possible. So what happens now is any sell here is premature. That means the trader knows exactly what he's doing. He knows how much he wants to risk. He knows where his stop is. How far is it 1 ATR, 2 ATR, whatever his stop is? Is he looking at the RSI, which is overbought on the daily and the 4 hourly? And then basically weeks up, it comes right now, he sells it. There's some ATR above. There's also one way to do it. And he's prepared to take the loss. And that kind of trading usually means his lot size is very small. So okay, certain lot sizes where I go in, right, like stuff like this one, if I decide to take a sell, I can go in 10 lots, 50 lots. But stuff like this, where you just sell because of previous structure, like so. If I put 50 lots, means I made a mistake. I made a mistake in my lot size. Such lot size, right, it has to be really small. That means you go in, instead of risking like 2%, maybe you only risk like 0.5%. If I risk anything more, it means I made a blunder. I've made those blunders before. Instead of putting some small lots, I end up putting huge lots instead. And you end up they're damaging yourself psychologically, trade-wise. You know you shouldn't have done it, but you got tired, you just made a mistake. You know, it happens. So, but basically what I'm trying to say is, you put a limit order here, the size of lot limit is much, much smaller, because this type of limit orders tend to be, they don't have a high probability rate. And the only way to when I say high probability, let me say what that means. It means 60-40. There's a 40%, there's a 60% chance you might win, 40% chance you might lose. For me, that's not good enough. Can you imagine losing consecutively 4 times in a row and you just lost $5,000, $6,000, $7,000, $8,000 on a 100K account, let's say? It doesn't feel good, even though it's a 100K account, it's only 8K, right? So at the end of the day, you don't want this kind of consecutive streaks, you see. And when it comes to limit orders like that, the chance of losing it is quite high. What will make this sell better sell the downside is it actually breaks. Then here it breaks, you sell it down here. That makes sense. Could this go down further? It can also, and I'll show you why. But can this go up further as well before it starts to break down really hard sideways, and then it goes down? See, this can also play out after it's taken out more stops before it starts to turn. See, all this can happen. This could be a double top in the making as well, right? So let's say we go to the 4 hour. Basically, if you're going to look for a retracement, so it could go up a little bit higher. Basically, price action can always weak out higher. Suddenly, this one starts to pull back this way. It comes out right there. That's also possible. But to actually do this based off what it's doing now is quite premature, right? So any sells here based off a sell limit should be small. Once you get more confirmation to the downside, then your lot size can be much bigger. So basically, if you start to get something like that, if you're lucky, you get something like that, you start to get something like that, then you're lucky. Then you should take the sell, big lots, go down, right? So basically, what I'm trying to say here, over here, it's all, you're winging it. Whatever you see is whatever you try. Is there any bias? Is this going to go down? Is this going to go down here? Is this going to go up here? Who knows, man? Nobody knows. Not from a technical point of view, because from a technical point of view, this shit here, this fucker here can go anywhere. It can go anywhere. Really. 1, 2, 3. Once it's broken, once made a third move. Who knows? What if it just goes up like that? Up like that. up like this. You see? I mean, look, you just chunk all the way down. You chunk all the way up. Fuck yeah, you can do that too. What if this pullback is just that, and this pullback is just that, and then it continues up. This one pullback just continue down. You can do that. You can do that for sure. All right. And if let's say price action had done something like this one, like this, right? And you're looking for the buyout because someone told you it was impulse correction, impulse. Well, guess what? Sorry, bye-bye. Your account got blown. Right? My account got blown if I just put in big lots in it. I just don't care. Just impulse correction, I buy big lots. Well, just stopped out immediately. Stopped out immediately, or the account is bust in lots of size is too big. So basically, what I'm trying to say is at this point in time, you're winging it. Whatever you see, whatever you take. Whatever you see, whatever you just take. If it shows things to the upside, you take the buy. If it shows stuff to the downside, you take the sell. And then you just take the certain place here. Let's say you just take the certain place here. You might take a certain level, you might take a certain level, you just get out. Right? If you can take it to, if you wish to take it here, so be it, just get out. Don't think that this is going to go here and there. Maybe it does. Just take it there. If it does stuff like that, okay, fine. Then let's go again. If it's wrong, if you just took one last move down and then shot up, you're stopped out. You took some money here already, right? But here you got stopped out, right? So your account will still be in profits. I can guarantee you, right? So basically, that's my point. At this point, whatever you see is whatever you get, and you should be trading on a very low time frame. Okay? On a very low time, 15 minutes and below. You can trade on this on the 15 minutes and below. And never forget, this could be all the correction. Suddenly this one pops above, but it doesn't pop down, it pops sideways like that. Guess what? Up again. See? Guess what? Right? See? Guess what? Pops up. You see this? What do you do? Pops up. That's right. You don't think pop down. Right? All right. So, but whatever you see is what you get. All right. If it pops up, don't forget, You don't want to pop and just let's go. You know, it's not gonna do that. Just take what you can, then wait for the next setup, and then just take it again. All right. So this type of trading is a lot different from the earlier trading that we're talking about. It's different from this. Right. This one has got its own reasoning as well. Right. 1, 2, 3, 1, 2, 3. But you really got this. So right now, what you see is what you get. That's all I want to say about that. All right. Thanks for listening. See you. Bye.